And now we are heading towards next panel discussion on the future of crowd investment. And this panel discussion will be conducted by Max Giordano, who's over here, angel investor himself and also part of the Wired consulting team. It's great to have you here, Max, and the stage now belongs to the brave ones.
Thank you. Hello, everyone. How are you doing? Air good? Can you shut up? If you look at my right foot, it's a broken foot from martial arts. So if you don't want to be kicked by me somewhere, shut up. And I'm really thrilled about this panel, and we have an amazing lineup of speakers. But please allow me to give you some context before we jump into the discussion. I'll introduce the speakers more properly. It's super exciting times to be an entrepreneur and to look for funds because, as you know, close to $150 billion companies out there valued at $1 billion. More interesting, if you look at the pace, it's amazing. Like, it's accelerating so fast. It's really, really exciting times. So basically, if you have a product that looks for scale and has traction, you're doing actually a good job. Chances that you will secure funding is really, really high. And it keeps accelerating. The volume is going up like crazy. And so for those type of companies, this whole ecosystem seems to work really, really well. But what about companies that, for instance, have a product which is great but hasn't seen yet the traction, or a vision that has not been yet implemented with the technology? And hey, okay, someone needs to. Sandra, you should. Did you get me so far? All good? You get my point? So if you have scale, if you have traction, you will find money. That's my simple statement. But what about if you have like a vision and if you have product, you don't have scale yet, or the technology is not out yet, you might run into some problems. And I want to take you back just for a few moments to a guy, Graf Zeppelin. 100 years ago, he had a vision about flying. Basically, he was so convinced that this thing will take off one day. And what happened was that basically he funded it himself as a Graf. The first flight was 18 minutes, it crashed, not really promising to an investor. He basically burned half of his personal wealth on that. And later on, basically, he was not able to convince any investor about his vision and dream, and basically he was almost ruined and bankrupt. But he kept on dreaming about this vision and this idea, and it accumulated all with this airship in 1908. So basically, the remaining investors were watching very carefully that flight, and basically it was everything on one card. So if this takes off, he will be able to secure the money. And you guessed right, of course it crashed. So unfortunately, this also went down, and he basically was broke. So he could have buried the idea, but something interesting happened. Over these last 8 years, people started to buy into his dream of flying. People started to really like this idea that one day you can take off. And so something extraordinary happened. They basically collected money. And believe it or not, the Volksspende in 1908, it were people like you and me giving the Count money, like, yeah, you know what, you should continue to build these crazy Zeppelins, and the equivalent of 6 million mark is today over 60 million. If you donated a lot, you even got like stuff like, for instance, spoons made out of aluminum from the crash site. So you even got the reward for that if you're being a big donor. And I don't know, but this is probably the first crowd finance campaign ever, because the exactly same mechanism you have today on Indiegogo, on Kickstarter, etc. So on that note, basically, to introduce the panel now, just imagine what they've done with these funds. So 6 million went into production of Zeppelins, but the more interesting bit was with the foundation of new funds were generated for new companies, and one of those companies you might have heard of, it came right out of the Volksspende, ZF, and today it's the #2 maker of auto parts in the world behind Bosch, and we're talking about a giant with over $1 billion in EBIT every year. So to introduce the topic of this panel, basically, just imagine for a second if you would have been a donor to this Volksspende and if you would have get a little bit of percentage on ZF. I mean, you've been a very lucky guy and every one of your family and the third and fourth generation. So on that note, can I please ask the panelists to join me on stage? Because that's actually the topic that we would like to cover. Crowdfinance, alternative ways of finance, how you can get money. Can you actually give an applause? Applause, yes, yes. How about there? How about the guys talking? Applause, good. So it's an amazing panel with a wide variety of skills. I start with the ladies. So Neha, founder and CEO of Deal Index, broad background in private equity, finance advisor, etc., etc. And what's really cool about Deal Index is you guys are aggregating all sorts of data across platforms. It's a great dashboard. Check it out. We have Katie. Can you another welcome just to get you guys? Yeah. Katie has been very a vital figure in the Estonian economic boom in the electronic industry, I can say, right? And what's really cool about Funderbeam is basically with Funderbeam, she's taking investors along the whole journey from analytics to basically the aggregation of stuff to actually even to the trading, like a secondary market. You have the whole thing. And what's really cool is she's using blockchain technology. So you guys will hear about it a lot this afternoon, but here's actually an example where someone takes the technology to the platform. We have Aman as a financial expert, really fluent in fintech, in software, etc. He was overseeing over 20 deals in the M&A space, and you're representing Arma Partners, basically a really nice M&A corporate finance advisory. Lots of deals, great company, check it out. I'm doing the advertisement for those guys. So. Last but certainly not least, Bo, I think you had like 3 careers or something like that. Started as a VC, then in a second career created a valuation company which became the industry leader. And now in his third career really is a vital figure in the peer-to-peer space. And I think you not only have created the leading conference, I mean, with your platform, NSR, these guys have created a whole ecosystem where you can get into the peer-to-peer space, you can aggregate your loans, run everything. You do a better job explaining it, what you do than I do. But let me start asking you, like if you heard the story about Count Zeppelin, today he would have access to crowd finance, to peer-to-peer, etc. Peer-to-peer as an industry has been exploding. I think last year we've seen a $20 billion industry, doubling from 2014. Why is that? Why is this industry exploding, and where do you see it going on this year?
That's a great question, Max. Thank you for the introduction. I'm very pleased to be here. The question really is, so why is peer-to-peer lending exploding? And I'm come from it from the perspective of the United States, where we have a real addiction to debt, and we have a real need for returns. So, as many of you know, the American appetite for consumer goods is limitless, and we have a big credit problem in terms of borrowing against credit cards. So that is one thing that peer-to-peer lending solves, essentially, is providing a lower cost of capital to Americans who need to refinance their debt to a healthier standard, which the banks are not offering today. So that is one reason why it's exploding on the demand side. And then on the supply side, in terms of investing, there's a story of a woman. There's a true story where an elderly lady who essentially said came into the bank, had a CD that was returning 4, maybe 5% certificate of deposit. So it was returning cash. It was a guaranteed instrument, and she was living on this. She was living on the 4 or 5% interest, and she came in to renew her CD, and when she met the banker, and the banker said, "I'm sorry, but we don't have 4 or 5% today. We have like 0.5% at best." And the woman turned to him and say, "How can you do this to me? How can you take away my livelihood?" That's the other side of the equation, is really access to returns.
Yeah. I can imagine. Thanks. Aman, if you listen to that, the industry like crowdfinance, peer-to-peer, how do your clients react? How is the financial sector or the incumbents react to these kind of developments?
Yeah, sure. So again, thank you for having me. I think the first thing to highlight is the scale of the opportunity. So there was a recent Goldman Sachs report which raised the prospect of about $4.7 trillion of banking revenue fees that were at stake from fintech disruptors, crowdfinance providers, etc. So that's the massive, gargantuan nature of the opportunity. Really, to see what the proposition is going to be, it's, I think, really centered around three things. One is actually cost reduction, so removal of intermediaries and actually reduction of transaction costs. And two is the improvement of the quality of service that you're actually providing the end customer through the removal of those intermediaries. There's also the fintech providers, to Bo's point, are actually better able to assess risk and match it with people's risk appetite. So in the case of the old grandma, she'll be able to have something that matches her risk appetite, but actually some of the peer-to-peer lenders, because of the nature of the algorithms that they have access to and the unique sources of data that they have, can actually price risk and financial instruments better and more effectively than some of the incumbent providers of financial products. And then thirdly, there's not that maturity mismatch that exists where a big bank is trying to match a deposit base which could be liquidated at any time versus securities that have varying lengths of time. You and I can each make a decision as to how long we want to invest a piece of our wealth for and when we want it back. So those are really the propositions. If we look at what the impact is actually on the financial institutions of that proposition, and really the holistic idea of that proposition is reducing or removing economic friction, much in the same way as credit cards did in the 70s or the advent of ATMs, and increasing financial transactions. The banks are really doing three things, what I call the 3 Ps. They're going for partnerships. So the example of Funding Circle and Santander, for example, where Funding Circle kick up SMEs that don't have access to banking services to Santander, and Santander provides small loans and small loan origination to Funding Circle, so partnership. The second is plagiarism, and we've got our colleagues from Deutsche Bank in this room amongst many other of the large incumbent banks, increasingly getting into Silicon Valley, becoming digital transformation focused and figuring out what their proposition is going to be in that space. So copying what the peer-to-peer providers are doing. And then thirdly, pivoting. And the pivot is probably the most significant. Where they see all of their different sources of revenue under attack, they're figuring out, let's refine our product proposition in a certain number of geographies, be really, really good at that. And in the UK market, you see that with the success of some of the challenger banks that have emerged, the likes of Shawbrook and Aldermore, that have a very, very distinct proposition and are valued very highly by the market.
Thank you. Katie, with Thunderbeam, I really don't want to limit it to blockchain because you guys are doing so much more. But of course, the question is, why have you chosen the blockchain technology? What is your experience with it?
Yeah. First of all, how much of you actually understand blockchain?
Yeah, who understands blockchain?
Sort of, yes.
Okay, be honest.
I'll give you an example. What people say and what they think is what the blockchain will bring to us is the next level of revolution compared to World Wide Web and Internet. How much of you actually understand how the Internet is functioning and what technology is behind the Internet?
Okay, there's one guy who understands it.
Maybe not so much, but we all know the impact the Internet has brought to us. And what's the difference between the Internet and the blockchain is that the Internet is meant for exchanging data, exchanging information. And now the level higher is exchange of values and exchanging the values and exchanging through transactions what I own, I transfer to you, and you transfer back the funds. So we don't have to actually understand how the blockchain works, but we have to understand what impact the blockchain is bringing to us. And now we come back to the crowdfunding side, is that what's happening in the world is that we all start living cross borders. We start living cross jurisdictions and we start living cross cultures. So if we let's say, live in Germany, and we want to sell a car, or we want to sell a house, or people get married in Germany. Then there's one single central trusted authority who approves the transaction. But now people are buying the houses cross-border, they want to invest cross-border, they want to take part of the innovations cross-border. And the same with marriages. People marry, the people from Chile married to people in Germany. So what is this single trusted authority? And this is where the blockchain is coming and making a huge difference, is that we start living cross-border. And I love crowdfunding because I think I've been working for the stock exchange and a group called NASDAQ. And it's also a part, and it's a combination of crowdfunding as well. There's a company who wants funding and people give the funding. But what's in financial sector is there's so many intermediaries between me having the funds and between a company wanting the funds. But in crowdfunding, the financing is becoming emotional. Besides expecting some return on the investments, people actually want to support the innovation. They become part of the journey and they become part of the innovation. So this is going to be a huge change because the philosophy behind investing will change.
Did you get it?
That was about blockchain, actually.
Yeah. So to say it with Steve Jobs, it just works. Somehow it just works, and there's a guy coming later, he has even blockchain on in his badge, so ask him about more. But thank you. Neha, I mean, congratulations, you guys created some indices around crowdfunding. Can you tell a little bit about it? What's so special about it? How you compare it to other indices?
Sure. So we launched indices with CNBC last year. We've done it in partnership with them. We provide the data. What they do is they track the crowdfunding industry, the volumes, live deals. There are 4 indices. We have one for the UK, global, the technology industry, and then the wider companies that are raising. What they do is provide more transparency on what's going on in the crowdfunding industry. It's a very, very fragmented industry. You have up to 800 to 1,000 platforms globally, and getting context on the industry can be quite hard, especially cutting through all the noise. So what we've tried to do with the indices is focus on, you can see over a period of time, what's the volatility, what are the volumes month on month. You can see clear trends emerging through that. Certain sectors are better at raising money online. So in the UK, food and beverage is really popular with the crowd. It resonates with the retail investor. You can compare what's happening in the UK versus a market like Germany. And it provides greater exposure overall.
And you just mentioned that you've been surprised by some of the data. Was there like something when you first looked at the data, something that's stuck out, something that you've been really surprised by identifying?
I think overall there are a few things. One is the pace of growth and acceptance, especially in the UK, which is probably the ideal example of crowdfunding because you have proper retail investment, and you have the institution and VC involvement. So the pace of the growth, the success rates of closing the deals, and then certain trends which clearly resonate. So you have food and beverage and beer companies in the UK which will get funding regardless of the company. You just need to have a video of a beer and a brewery in the background and you'll get funding in a day's time. So those are trends which clearly emerge. It resonates with the crowd. They understand that this is a product and there is an emotional aspect to it to say, I want to support that company. So all of those are, clear trends we see.
I was once discussing the how many of you actually follow the reports that stock exchange listed companies produce and when they do the IPO? Do you think how many time it takes for them to start producing videos and cartoons and nicely designed annual reports? So I think it seems to me that the crowdfunding and the way the crowdfunding sites present the data and present the information will soon have impact on the main financial markets. And the same comes from down to up, so that the early stage companies have to start providing more information and the crowdfunding, so that actually the guys having the funds understand where they put the funds and how the money is performing.
Mm-hmm. This is also echoed in the peer-to-peer lending segment in the United States, where individuals investing in other individuals is a very potent. It's a magnificent sort of groundswell of support for that behavior. And the way we describe it at NSR is to say that we are rebuilding the fabric of our economy by allowing an individual to invest directly in the success and in the future of another individual. And those individuals are receiving the two benefits I spoke about earlier. One is the borrower gets a very responsible, fully amortizing, low-cost loan. The investor actually gets a reasonable return. And yes, there's risk, but by stripping out that fat middle layer that has been built up by banks over the past 70 years, we're able to return that to both borrower and investor. Now, the beauty of this system is that peers are still investing in individual peers. Mm-hmm. And there was a time where we felt like this was moving from P to P to I to P. So major institutions were coming in and flooding the markets with capital. But the platforms, Lending Club and Prosper and others, are really preserving that peer nature, the peer funding nature. So it's still very much many to many, many tens of thousands of individual investors lending to many millions of individual borrowers.
Mm-hmm. And just to stick with you for a moment, like, how do we actually calculate the risk of a loan? Like, how do you...
The risks in peer-to-peer lending, again, this is an age-old concept. It's one person borrowing to another. There's essentially default risk, and default risk is tied very closely to employment. So, what keeps us up at night is another global financial crisis where unemployment spikes and then charge-offs occur. We measure it precisely the same way as banks do, okay. And we have access to hundreds of data points per borrower. So the risks are quite well understood by quantitative analysts.
Mm-hmm. So shall I call my mother and tell her, like, look, cancel your bank account, all the savings?
In the U.S., we recommend a 5 to 10% allocation of an entire portfolio, investable net worth, and that capital, because it's relatively illiquid, needs to be money that you're not going to want to turn over to buy your next house or your next car. It's long-term money. Yes, it should be a part of. I believe it should be a part of everyone's portfolio.
Cool. I mean, Aman, if you're looking at the crowd and the peer-to-peer industry, how these companies, how is their access to capital in a moment, in your opinion?
Yeah, sure. So I think the Silicon Valley model of investing in growth at the expense of everything was what flooded the European markets initially. So you had a lot of West Coast money coming into Europe, flooding the markets for anybody who had a strong customer acquisition model. It didn't necessarily matter that you didn't know how you were going to monetize that or what your margins were going to be or profitability, etc. It was all about getting more customers on board, and you'd figure everything else out later. So there was a glut of money over the last 2 or 3 years, and we saw that with some pretty punchy unicorn-type valuations for more staid European companies. I think what we've seen recently has been a sort of a pause for breath, where a lot of particularly the US funds that were traditionally plowing in money into Europe have taken a breath. They want to take stock of the global financial markets, what's going to be happening there, and actually figure out how the customer propositions and end revenue generation model for some of these peer-to-peer platforms and innovative revenue models is going to evolve. And until they've shown some development around that, it's going to be increasingly difficult to source capital for those kinds of businesses. I think a lot of them have a model where you're really continuously feeding the beast. Because your customer acquisition costs are so high and because customer attrition is so high in the B2B space, you keep plowing in money until you start sort of losing your mind. And so that's why we believe that there's going to be a a period of consolidation in a lot of the peer-to-peer lenders across Europe as they try and get critical mass. And we also believe that their model will really be stretched and tested when we exit this current low credit environment. How will these businesses perform through the credit cycle? That's something we haven't seen yet, and we're not really sure is going to happen in the next 3 or 4 or 5 years. Mm-hmm. Mm-hmm.
Just wondering, just to switch topics real quick, Katie, about your secondary market. How do you see, what kind of influence does it currently have on the early stage, for instance?
When we look at what has happened on the main markets and on the stock markets, and with private capital last 10 years is that, guess how much funds Google, Amazon, eBay raised before the IPO? 7 million. $7 million before they went to the stock exchange and listed. So, and the latest was Google, 2004, and now the Facebook was listed 2012, and they raised 2.4 billion before being listed on the stock exchange. So the growth is somewhere else, and also the crowdfunding tries to replace the pre-IPO market or even the IPO market for giving investors the return on the investments, and the form of giving growth or providing growth capital has moved from exchanges to the crowdfunding sites, to the crowdfunding platforms, and also for the VCs. And this is, I think, is again a big change in the capital and providing the capital. And now I reach to the secondary market is that if you invest through the crowdfunding site, you don't get liquidity. If you're an angel, you actually don't get liquidity. And of course, Funderbeam is trying to get and beat the trend. And we built a primary and secondary market for the early stage companies. And that's why we use the blockchain. So we see there's a demand for the liquidity, also for the early stage companies. And let's see how, do we beat the market? Will we reach the trends when the trend is there?
Mm-hmm. Can I jump in and comment on that? So as Max mentioned, my former careers were centered around Silicon Valley as a VC and then as a valuation expert. What Katie is doing is important not only for the common investor, for those that want to participate in the equity of startups, but also for those that are building the startups, because these people are joining firms when they're at 10 employees, 20 employees, 50 employees, 200 employees. When Facebook went public, it had 2,000 employees. So it's an extreme example, but it's a very good one. These people need to get liquid. And so if there is liquidity in the venture system, then these people can leave at the appropriate time when they're no longer as useful as they used to be. They can get liquid and they can sell their stock options. They can execute their stock options, sell their shares in an active secondary market. And that allows experts, specialists at startups to recycle their capital, recycle their sweat equity on a faster basis. That would be very healthy for our economy across the world.
I'm really afraid it's such an interesting topic, and if that watch is right, we've been only able to scratch at the very surface. I just can encourage every one of you, these guys are around, grab their intelligence, their input. As a last question, it's maybe a stupid question, but let's say we're in a fairy tale, and I'm the good witch, and I can fulfill any wish you have for your individual company. Don't freak out. I'm starting with you, Neha. So if I'm the good witch and I can fulfill any wish for your company, what would that be for the future?
I think from our perspective, we are riding on a few trends, the market growing. I think more transparency on data, more data available, even from companies that are looking to raise would be better for everybody. Mm-hmm. Because there is a lot of, for us, the biggest challenge is the disparity on data available for investment. And it's still very low compared to, I feel, what people should get when they're investing money through the crowd.
Okay, so transparency is one. Katie?
that the capital can find interesting investment opportunities cross-border. That's a big dream.
That is a big dream. Aman, how about you? You have a dream that I can fulfill?
Yeah, quite selfish. I'd like to be a number one on people's speed dial when it comes to looking to do a transaction of any sort.
So you can walk around, give some cards out. Bo, how about you?
I would love it if you pulled out your magic wand and granted me a unified, global, intelligent regulatory framework.
That is a really big one. Okay, I'll do my best. Thank you guys for listening. Thank you guys for joining on the stage. Grab them. Thank you. Thank you. Thank you, guys. Thank you. Thank you, Leah.
Thank you very much, guys. Thank you, Max, for the input, and I can definitely envision you being a fairy tale.